When you think about the retail trading landscape right now, where do you put Robinhood? And by the way, does Robinhood stay as an independent company long term in your mind?
You know, first, the way I would categorize them, and they're probably one of the most, I've covered the space for quite a long time. I saw the e-brokers come public. They're one of the most disruptive companies in bringing innovation that I've ever really, followed or watched. They democratized finance. They brought on the zero commission. They had, some call it magical, their customer acquisition, how they did it word of mouth. So I still look at them as very innovative, but very much catered to the young investor versus the Schwabs, Interactive Brokers, et cetera. So what they really got to do is broaden out their product offering. They had a big issue with, their customer, over half their revenues in the second quarter were from Dogecoin. That dropped off dramatically in 3Q. Now, so that was a hole that they just couldn't replace. Now, coming up, they're creating this crypto, wallet. They got 1.6 million customers waiting, and it's going to be in beta test in January. They got other, new products that they can list as for what they call fully paid securities lending. So, they're going to have to innovate. They're sort of in a race to broaden their revenues out, given this innovative model that they have.
Yeah, Rich, it's Mike. I mean, granting that without a doubt Robinhood was very disruptive, I think the big question, maybe the market's now reflecting the question of now that everybody's at zero commission for cash equities, what really is proprietary, special, sticky about Robinhood's app, aside from it being, by everyone's agreement, a very good user interface. So now they have, a quarter of Interactive Brokers' customer assets, and even after this decline, the stock is not much less than half the market cap of Interactive Brokers. So I guess the question still is, what can they add that might justify that premium that still remains?
Yeah. Hey, Mike, good to talk with you. And yeah, I think that's a fair question. But when I look at Robinhood, and it goes to Andrew's sort of question as well. When you look at Robinhood, it's really their innovation. It's their ability to create new products quickly and to cater to this young investor. They talk about, more than half of their customers being their first time brokerage accounts, ever. So some of the things they're doing, they just created, a first trade sort of robo app that allows investors, rather than, to pick a single stock, that they can put in their risk tolerance for the, a first time investor, and get a diversification through some ETFs. And I think it's this, sort of innovation. You've seen the big guys even copy them to some extent. Fidelity has a Fidelity Kids platform, trying to get to the younger investor, the new investor. Schwab has a starter platform. So what Robinhood really brings to the game is connecting, democratizing finance. They got to broaden out their product set. So in case Dogecoin doesn't trade like it did in the second quarter, they can make up the hole in revenues.
Shepard Smith here. Thanks for watching CNBC on YouTube.